Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look at the gold market right now. So here's the pullback that we have discussed also has happened. Daily trend remains bearish, and in first glance, if you trade on intraday charts and the daily trend you use as a direction, so theoretically you should see chances for taking the short position. But because of the few moments, I wouldn't be hurry up with this decision. First of all, in the euro currency, the price performance suggests that euro currency could extend the upward retracement. Correspondingly, since on a gold market we have bullish weekly trend, here market also could show a bit strong upward bounce. The reason of this pullback is not the FOMC meeting and not what the Jerome Powell said. In fact, statements from the Jerome Powell was relatively hawkish. As I explained in today's video in euro currency, Jerome Powell actually has capitulated before inflation and the inflation background. So the Fed just doesn't know what to do with it. And the only thing that he said that probably we will not increase rate in nearest time, but you should forget about the cutting rate. And on that background, gold should keep dropping. But the upward action has happened because of the announcements of this, as it was called by the United States Treasury, announcement of the stabilization, some efforts on the stabilization of yields in the bond market, which means that, translating from the broad language into the common language, that Fed intends to use tax revenues that it has got in this recent first quarter period in April to buy back bonds from the market. In a simple language, it means quantitative easing. That's the reason why stocks has rebounded, all dollar levels are rising, and gold market has shown this upward action. As you understand, this idea is a bit extended in terms of the time that will be applied for the few months. And in general, United States Treasury said that will be approximately in May and June, and could make some long-lasting effect. And from that standpoint, despite that market right now stands on intraday resistance, in general we have the bearish performance. It's a kind of the ABCD pattern that we discussed. The market could reach this support area. Currently, I wouldn't hurry up with taking the short position, despite that we are coming to the payrolls and so on. So I prefer to wait and see what will happen, because here some more extended upward bounce might be. On the full time frame chart, you could see that upward action has started precisely from the predefined level, and here we have another technical moments standing in favor of the possible slightly higher upward action. First of all, this is divergence that suggests taking out this top. On the hourly chart, this market right now stands in the confluence, and that explains why we have this bounce. It's 23.25, 23.38 is confluence resistance. The market's turning down. Maybe it will turn down and really will reach this next target of the butterfly. But guys, with this divergence, and if we take a look at the hourly chart, here's relatively strong acceleration here. I'm not exclude the chance that we will get reverse head and shoulders pattern, that which is very similar to what we have on the euro currency, or suggest to get on the euro currency as well, which potentially means that we could get larger ABCD pattern to the. So in the current circumstances, of course, you could try to sell against this confluence, and maybe you will be right, because context is in general daily trend stands bearish, market stands in the confluence after the pullback, this butterfly, and well, maybe it's relatively safe trying to make the bet on a possible further downward drop, especially if we will get tomorrow strong payrolls. That will be correct decision. But I am just a bit worried about the background of this upward bounce, and personally I prefer to wait. I do not want to take the short position here, despite the technical picture in general makes it possible. So theoretically it is possible. Somehow I suggest that the market could try to complete the XLP target here, and we could get this hand shoulders pattern that we similarly have on the euro currency. Potentially we could get greater bounce to the 23.74 as we initially thought about when we discussed the retracement here. So that and towards some thoughts on gold market. Let's see what will happen at the end of the week.